Hello, everybody. I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, boom, goes the stock market. Does anybody wonder why? Well, when you say, let's turn off the tariffs, the rest of the world heard you. The stock market heard as well. Corporations heard. And boom, there goes the stock market. Did you watch the parade go by the last 7 to 10 days? Or were you in it? Buying down? Let me know, because that's what we're talking about tonight and so much more. And welcome to the SSN Nation Wealthy Wednesday night live stream. Stop struggling now, gear. No fear, no excuses. Check. And please like, subscribe, and click the bell below so you get the latest updates. Now, let's get All right, welcome back, ladies and gentlemen. Sorry I'm a little bit late this evening, technical difficulties, but you know how it goes on the road. It's no internet, got to figure it out. Now, let me know if you guys can hear me. I would need to know that because once again, it shows in the background you can hear me, but that doesn't necessarily mean you can hear me. So make sure you let yourself be known. Also, if you are here, please share the videos because you never know who's here trying to help other people. That's right. Bring your pens, pads, and papers. Well, I don't know what to tell you, ladies and gentlemen. It's going as expected. No tariffs, stock market bounces back. Threat of tariffs, stock market goes down. This is where wealth is made. The rich were buying up the stock market the past 7 to 10 days. Then today they were buying some more because they were near their still 52-week lows and some 2-year low. Now, I have to ask you, we talked about it on Monday. Now I'm going to say it again. 3 months from now, when the Feds have their meeting, that will be the third quarter. That means a rate cut. With or without tariffs, there will be an increase in the stock market due to rate cuts by the Federal Reserve. That's why you have to be in the game. It's not too late yet, ladies and gentlemen. It's just the tip of the iceberg. A one-time pop over 2,000, almost 3,000 Dow points. That just lets you know what you have missed out on. A wealth transfer just shifted right in front of your eyes because you sat there and did nothing? Or were you like the SSN Nation members who did not sit there? They were buying all this time. And then when you woke up this morning and this afternoon, you looked at your account, you were like, whoa, something happened. I wonder what it could be. Maybe somebody said, oh, I'm putting a pause on tariffs. The world called the bluff. They said, okay, we can play the tariff game. And so the bluff had to go bye-bye, and the markets resulted in a boom, a stock wave like none other since 2008. Oh, yes, this is historic. But look at the manipulation, and have you been able to take advantage? I hope you guys are still listening. This party is a long way from over. But what you do know is you have 1 year, 8 months left to get in the game and make a dent. Because after 1 year, 8 months, you are going to have one hell of a ride, or you're going to have one hell of a life of misery going forward. So, which part of the equation do you want to be on? Because 80 to 85% of the population will be living paycheck to paycheck in 1 year, 8 months. So where are you going to be getting that extra income from? Boom. The stock market, like none other, happened today, and there will be a rise. Are you ready for the ride for the next 1 year, 8 months? Well, pay attention to the stock market. Go down below in the description box. Get your Robinhood, Webull, Wealthfront, Moo, all of it. Get them all, ladies and gentlemen. And by the way, out here on I see right now, even though I have a title, which is Boom, that's weird. It's not in on the internet such as that. So I have to change this. Boom. I know I can't see it, but stock market. All right. I'm just going to go. Okay. What now? There we go. What now, ladies and gentlemen? That's what the title of this is. Boom. Stock market. What now? That's what it's supposed to be. All right. Now, everybody knows I've been talking about this for I don't know how long in the last 6 months, 7 months, a year, 2 years. Been trying to get you guys on board, and hopefully you guys were on board. Dollar cost average your way down, as we discussed on Monday. EV Place, welcome to the SSN Nation Wealthy Wednesday night live stream. Thank you so much for being here. And he brings his tagline, or is it a she? Good evening. I hope you were doing well. Yes, we're all doing well. Boom! The stock market explosion today. All it took was tariffs. They're bad. Let's get rid of them. Boom goes the stock market. Just what we talked about before. And yes, I hope you guys haven't missed out on MSTY. And since he says that, MSTR. No matter which way you go, both of those are good. MSTR is the actual stock. MSTY is option income. Trading option income is what YieldMax ETFs do, and they give dividends using the MSTY. Boom! They went today. And yes, if you did not get your dollar cost average down over the last 3, 4, 5 days with MSTY, shame on you, because that means your dividends are a lot higher. But today, since there was this boom on the stock market, you know what that means. That meant you had an appreciation in stock value, and in a week or two, you will have dividends to come along for the ride. Oh, I love it when a plan comes together. Just like I'm saying, ladies and gentlemen, I'm happy for you more than anything. Brian P., Mr. Dividend, you saw that boom from your YieldMax ETFs, your Roundhill, the Defiance Group of stocks that does option income trading. It was a beautiful day because you got the appreciation, and we know we're getting 20, 30, 40, 50, 60, 70, 80% returns depending on which one of their stocks or ETFs that you hold. It's a beautiful thing, Brian P. And he brings his tagline this evening. Happy day, Eric. Thank you. I hope all is well with you. Yes, we're going along well. Happy day, SSN family. Smash that like button. Give it a 1 piece. That's what we like to do here. Make sure they know you're in the house. And once again, welcome to the SSN Nation Wealthy Wednesday night live stream. Mr. Dividend in the house. I know he had a big, huge smile on his face today. I picked up some today. You had no choice. Even ULTY is still undervalued. A whole bunch of YieldMax ETFs were still undervalued, but MSTY, you had no choice. Should have been picking it up over the last 5 days. Even though my dollar cost average with them is pretty low, I was like, even if it was like a 20 cents below, I was like, yeah, let me get some more. Let me keep eating. And sure enough, today, I'm sitting there like, oh, what happened? I fell asleep this morning because I wanted to get some more good stuff this morning. I woke up and I was like seeing green everywhere lit up. I was like, oh, something happened. What's the only thing that can happen? Somebody says we're not doing tariff, and I see, oh, there's a pause on tariffs. I'm like, there we go. Boom. And there we are. They've been playing us all along. Well, not us, not the SSN Nation. They haven't been playing us. We know what's going to happen. That's why we were saying get stocks, buy stocks like no tomorrow over the last 7 to 10 days. Don't blame us. But don't worry, ladies and gentlemen, there's a long way to go. That's right. They're not satisfied. Neither should you. Brian P says, I picked up Coney, LFGY, as well as ULTY. Exactly. That was the play the whole last 7 to 10 days. That's exactly the play. A little crypto from LFGY, along with some of the stocks together, combined crypto and stocks, option income trading. I like it. Then Coney, because crypto market's been going down 20, 30% or more. So of course there's going to be extra trading with Coney, Coinbase. A lot more trades going on the stock market for Coinbase and a option income for that. And then ULTY, a cavalcade of the YieldMax ETFs universe. And therefore, ULTY was way, way below value. It's still below value. So you had plenty of opportunity at $6, $5.90 to pick up a lot of shares. So now ULTY is weekly, LFGY is weekly, dividend stocks for Brian P and the rest of you who are watching this who picked up LFGY, ULTY. Congratulations. All right, let's see what brings forth this Friday. Post-retirement travel. Welcome to the SSN Nation Wealthy Wednesday night live stream. And Mr. Worldwide, you saw the boom from no matter which part of the world you were in. And you know what that means. Tomorrow, these stocks in the other markets, the Asia market, the Europe market, they're all going to go boom as well. So what can I say? This is a simple plan. See, this is what I love about this stock market. People think you have to study the charts. You have to do all this. All you generally have to do, in my opinion, is just pay attention to what the United States does along with the EU, and generally the direction, how things are going to be manipulated. Now, again, notice the word I've used, manipulated. Once you understand things are manipulated, there's no free market. It's manipulation to get you to make responses. So when the stock market was going down 7 to 10 days, most ordinary citizens were bailing out, allowing the wealthy folks who's paying attention. That's right, you, the wealthy one who was buying stocks over the last 7 to 10 days. That's you. You may say, well, my account, I don't feel wealthy. I'm not wealthy. But see, that's the path to wealth, ladies and gentlemen. Buy low, sell high. Brian P says CONY. That's right. Mr. Dividend. Businesses in the house. The seamless genius has arrived. Welcome to the SSN Nation Wealthy Wednesday night live stream. And she brings her tagline today. Hey, Boston SSN fam, hello to you. Happy Wednesday to you. Boom! Can this be the catalyst that's needed? Not quite yet, ladies and gentlemen. Stock market, the number one place to build wealth. What's behind that? When you're able to mess around with real estate. They haven't messed around with real estate just yet. The Federal Reserve on the way in 3 months. Somewhere in the third quarter, a rate cut. Somewhere in the fourth quarter, a rate cut. Somewhere in the first quarter, 2026, another rate cut. And if you don't keep playing the game of there will be tariffs and there won't be tariffs, well, I'll welcome it. I have no problem welcoming it because that means more of the SSN Nation can win. Oh, yes, remember on Monday, JEPQ 46, 45, 47. You sat there on the sidelines and said, no, I don't want $6 a year in dividends. I don't want 11, 12%, maybe 13% return on my money. I'm just going to sit by because that YouTube guy doesn't know what he's talking about. Boom! All of a sudden it's 50, 51 today. All of a sudden a $4, $5 per share appreciation of stock value increases, and you're still going to get that $5 to $6 dividend annually from JEPQ. But are you going to get 10%? Or are you going to be like some of the SSN Nation whose dollar cost average is under 50, and you're going to be getting 12.5 to 13% annual return from a JP Morgan ETF? I know. Isn't this a beautiful thing, ladies and gentlemen? All I can say is they set it up for you. All you had to do was get in the parade and join the party. There we go. That's it. Didn't we talk about it on Monday? To get in the train. Exactly. Because the train is going down the tracks. I told you we were going vertical. Hey, you're preaching to the choir. I went to the kitchen to get water. And when I got back to the computer, I couldn't believe the graph. Exactly. I went to sleep. I was up getting ready to get some more yum pre-market. And then I was like, I'm tired. Let me get some sleep. I'll be up in a few hours. Next thing I know, no, it wasn't a few hours. I woke up and it was like 1 o'clock p.m. Eastern, 10 a.m. And I was like, yes, just like you. I'm looking at green and I'm like, oh, this is good. Something must have happened. Oh, I wonder what it could be, because a federal rate cut, that's not going to do this. So naturally, it had to be. And sure enough, I go, oh, he paused the tariffs. Oh, imagine that. There you go, ladies and gentlemen. It's that simple. Manipulation. That's right. That's what we did. I couldn't believe the graph. Who could? Who could? We did. We told everybody. Yeah, we've been since last Monday. Not last Monday. 9 days ago Monday, we were telling people 1,000-point drop buy. 1,500, 2,000-point drop buy. What are you waiting for, ladies and gentlemen? 52-week lows. Buy. What more do you need? Remember, corporations can buy their own stocks so they can manipulate the market. That's one way they do it. The other way is what our government is doing right now, saying that there will be tariffs, and then the market reacts, and then after they have the market drop, then they turn around and say, oh, they're just being paused right now. Come to talk to us. Meanwhile, the rest of the world is like, we already were talking to you because we just told you if you do tariffs against us, we're implementing tariffs against you. We did already come to the table and talked. You blinked, America, and said, oh, I don't know. I don't think these tariffs are going to be a good idea, but come talk to us. They're like, we don't have to. You got to talk to us. You want to play around and get prizes and make sure your market evaporates $20 trillion? I don't think so, ladies and gentlemen. That's not how you negotiate. When you're the one losing, it's hard for you to tell other people, yeah, come here and negotiate with us. Let's go. I'm like, what kind of somebody doesn't know how business works? This is funny to me. There we go. Here we are. There is still some volatility. Yes, there is. That's why it's not over, ladies and gentlemen. It just went boom to capture back 2,900 points is what we almost lost. And in fact, we lost more than that over the last 7 to 10 days. It's just now getting to go up. Think about this. Go look at your 52-week highs and lows, and you'll find yourself somewhere like in the half to the lower half. Upper half, that means the stock has been performing very, very well. But I mean, for the most part, most stocks are 50% between their 52-week high, 52-week low. The ones that matter. VOO, ladies and gentlemen, were you sitting on the sideline? SPY, were you sitting on the sidelines? We were just talking about it on Monday, so there was no excuse. If you missed Monday's live stream, okay, I'm sorry. But if you missed last week's live streams, we were saying time to buy all of the big guys. Apple, we were saying it. Microsoft, it does not matter who it is. Even the Teslas, it does not matter. The Magnificent Seven, ladies and gentlemen. you should have been buying some of it, or VOO, VGT, VTI. I mean, I don't even know what to tell you. SPY, QQQ, all of it. We were saying, get it now while it's near 52-week lows. Go get it. And then today, boom, you're rewarded. Yeah, thanks to the SSN fam. Thank you so much, Biz Nessa. The Seamless Genius. Appreciate it. All right. Oh, wow. Hold on. I messed up somewhere. Let's see here. Oops. Whoa, what's going down? Oh, there we go. Okay. All right. EV plays. First ETF on XRP showed up today, not spot, but ×2. More is coming soon. Yeah, that's because they have to offload. See, we're already in digital money. So the weirdest thing, though, is this. If you're going to see, the thing you have to understand about money is you need money. You can't keep it digital. How are you going to keep value? That's what people keep misunderstanding. They go, well, we'll change our dollars in its digital currency, kind of. But now, if you start taking real currency out of the marketplace, and then you replace it with electronic currency, then electronic currency has what value? Ultimately. Because what's going to end up happening is he who can hack systems can win. Because ultimately somebody could say, well, I'm going to hack in here and infiltrate and either add more coin or take coins. So you're putting yourself in heavy, heavy danger, allowing individuals to take your money instead of regulated industries taking your money. It's kind of funny, right? When you say this, I say taking money. Like if you guys don't know, banks steal money from their customers. I suggest you just Google or just go to YouTube. I don't really care. Go to Instagrams, whatever. There'll be thousands of people saying banks stole their money. All right. This is not new. But now if you go electronic totally, you won't have a duffel bag of cash. That is bad news, ladies and gentlemen. So do not get all caught up with this, of course, crypto marketplace, because it could be a hindrance to currency overall as far as countries and their security for their currency. Just keep this in mind. So it can only go so far. And with any value of anything, just remember, it's all based on the perceived value. What will somebody pay for it, right? That's what this is. What will somebody pay for it? So I'll give you, let's say, I don't know the currency rate of any country. I mean, I do, but I'm not going to use any country. Let's just say XYZ country has a currency rate 50 to 1. They decide, okay, I'm going to go full digital. Does that change the value of their currency or the economics in their country? It does not. You can say, we're going to use Bitcoin, right? But now there has to be a value. Bitcoin just dropped 25 to 30% over the last month. So are you going to tie yourself to something that can drop 25, 30% and stay there? What value does that have? Because now you just lost 30% buying power. Not just perceived buying power like the stock market, right? When the stock market went down like 3,000, 3,500 points, you lost value on something you have to sell. But if you actually had currency and it dropped from $105,000 down to $75,000 and the prices are the same, or you're having inflation, now you're going totally the opposite way and you have no way to increase the value, right? So now you have to invest into something else, which would have been the stock market. But your value to buy stuff would have dropped to 74 grand. That's a problem. So if you want to join that party, no government will be allowing that type of events to happen. Because that would mean the billionaires, which is what crypto was intended for, gives nobody an advantage. So now can you imagine a billionaire going, I had $3 billion, but since it lost like 30 to 40%, I now have $1.5 billion. I don't think they would be very happy because they did nothing. There wasn't an investment. They didn't do anything. They're just sitting there like, oh yeah, I just lost damn near half my value for no apparent reason. Other than nobody's buying it at 105 right now. They're only buying it at 75. Big, big difference, ladies and gentlemen, than currency. So keep that in mind. Check your emails. I can't. But thank you so much for that, Brian P. Can't check my emails right now. I'm on the phone. So therefore, I can't get the code to go in to check and all that freaking 2 and 3 step verifications. Prayers to the families in the DR. There we go. This is a see, this is causing a problem with this is what it just drives me crazy, right? Infrastructure in countries that are developing nations, and you're starting to have cracks. And once you have more and more people and you don't reinforce your infrastructure, and we have this nightclub event. Now, it happens all over the world due to structures, right? It's happened. But the thing is, when you're a developing nation saying we're up and coming, and you keep having these little catastrophes, people take you less at your word. And now you have tourism being affected, especially when you're having tourists drown because they don't want to pay attention to red flags out at the beach. Don't understand there's tides and how strong the beach currents are and things like that. And they're still not going to blame the individual. They're going to blame where it happened at. And then when you have that situation with the person American on American crime, even though it has nothing to do with the island itself, people blame the island itself. It makes no sense. But this is the world we live in. Prayer to the families is exactly right. This is also, remember when I told you I made videos about structures and their integrity when you build a home, and how long cement really lasts, even though you think cement, it's a long lasting type of compound. It's not really. Humidity levels matter, and how you created it at the time. Remember, if you built something 40 years ago, the integrity of that building has changed from the original time you built it. There's degradation on every man-made material and object. So lumber, when I switch that to something, there's a length of time it will last for its strength. All right? Cement, the same thing. There's no difference. This building, which is what the prayers are for, in Santo Domingo is not 1 year old. It's not 5 years old. It's not 10 years old. 20 to 25 years, cement starts losing its integrity even before that because of humidity and water. Water and humidity is not a friend for cement. That's another thing, right? So if you have a building that's 30 years old, like in Florida, this is one of the reasons they had to start doing the condo townhomes type of rehab situation, because there's condos 30, 40, 50 years old and things have degraded. Now you have to go in and pay to fix it. But who's going to want to pay $20 million? Who wants to pay $10 million? That's where the problem comes in. So instead of fixing it up, paying this large sums, which in a developing nation, you're generally not going to have those large sums to pay, you'll risk it. You'll say, oh, let's just do this. Let's just do that, or nothing at all. And then you have catastrophic situations. This is why I made videos about this. So you would understand when you go buy investment properties and somebody tells you, I made this house or I made this building and it's 30 years old, your mind clicks and goes, wait a minute. The materials you use for this only last from 20 to 30 years. So your next question should be, what improvements have you done for the infrastructure and the integrity of this building? Because if you get an answer such as, we've done nothing but this little bit of fix it here, fix it there, then you should not be buying the building. This is why I made, I think it was a part 4, so you guys understand. This applies to homes. This applies to multifamily. This applies to everything when it comes to real estate. So keep that in mind. So when people say, I'm going to buy a house, okay, it looks nice. It was built in 2000. It's now 25 years old. And there's other things people do not realize. When you say how old a house is, I go, how old is it really? They put down the foundation, let's just say in 1999. They put the walls up in 1999. They put other infrastructure in 1999, but those little parts, the water heater, the stove, the refrigerator, those might have been built in 1997 or 1998. But it's brand new at the store. So you tell somebody, oh, we got it, it was built in 2000. So when 2025 comes, things start going crazy, rehab, whatever, you're thinking, oh, this place is only like 25 years old. But is it? It's 26. It's 27 with materials. So it's already in that margin of either replacement or you're going to have to repair. And now you're sitting there with all this repair because you bought a house that was built in 2000 and thinking, oh, it looks relatively new. It does. But then you move in and you're finding out, man, I got this little thing to do, that little thing to do. It just keeps going. Every time I turn around, there's something to do. That's because the building's integrity and the foundations, things move. That's how this works. All right. Enough talk about that. Post-retirement travel portfolio went up by 15K in less than 15 minutes. I am okay with that. I hear you. We're all okay with that. That's why we had a big salsa dance going on today. It was like, oh yeah, that's right. I'm like, raise the roof. I'm like, can you believe this? I'm like, can you see that right there? Just like the doctor ordered. My wife and I were doing the salsa dance exactly. You know it was that time of day. Business, PRT, that's right. Exactly. You know it. Exactly. I have the feeling the overnight market will explode. Can't wait for tomorrow morning. The bull is back. Hey, I don't know about the bull is back, but we will see because I don't see how. Here's the funny part. There's nothing that fundamentally changed with the United States infrastructure and businesses. See, this is where people are still living 70 to 78% paycheck to paycheck during the month. There's nothing that happened for Main Street. It's only manipulation by the wealthy. So in actuality, it's the sentiment. But there's not that many people that can pile in to keep a rally going after this substantial jump. Because if people weren't already buying when it dropped 2,000 points, 500 points, 1,000 points to 52-week lows, what's going to make people buy when there's a 20, 25% increase in price? So fundamentally, nothing has changed. The cost of food and everything costs the same or a little more because guess what? That bluff, we're going to pause tariffs. The other countries didn't go, oh yeah, we're pausing our tariffs. So everything imported is still going to cost more. So now what? So fundamentally, nothing has changed. So if there's another rally tomorrow, okay, so be it. We love it because there's still room that people should be buying at these prices. But afterwards, in Monday or Tuesday of next week, then what? And heaven forbid, if somebody starts talking smack, another country says, see, we weren't going to do nothing. And then all of a sudden, we have a person, that has a little, skin problem and says, oh, you talk, okay, we're going to do tariffs. Now we're going to have the same drop. And hopefully you guys understand what's happening. There's a wealth transfer happening. I told you 1 year, 8 months is what you have. That's why we need your credit to be very, very good. In 1 year, 8 months, look for 775 and higher. That's where you need to be. Lock it in. Start working towards that now if you haven't. That's what you need to worry about. Get your assets, get your duffel bag of cash ready, keep it on standby, and make sure that you're going to be ready to pounce on eventful things. This 10 days that we had, 7 to 10 days, last week and up until this morning, you had every chance to do something. Remember when post-retirement travel and Mr. Dividend and other investors, we've been telling you all along, you have to be in the market. You can't just sit idly by, whether you invest once a month, other month, once a week, every 3 days, whatever your thing is, you have to be in because your dollar cost average does end up mattering. So if you missed out on the last 7 to 10 days of buying, then you're missing out on the upside. You did not get to participate. You said, I'm not going to buy. Okay, well, guess what just happened? You lost out on potentially 10 to 20 to 30% increase in the value of your shares of stock, your portfolio, just because you missed today. You weren't in the market for the last 2 weeks. You weren't doing anything. You were just sitting there listening to this YouTube guy. These guys, what are they talking about on these live streams? It's no biggie. Well, guess what just happened? You missed out. You didn't have to do anything except get your dollar cost average lower. So when the prices pop up 10, 12, 15%, you get 10% increase in your overall portfolio. Can you imagine the billionaire who has $1 billion? He wakes up and he goes, oh my, I have $1.3 billion right now. $300 million, just like that. Because he was buying the last 7 to 10 days. Post-retirement travel, Mr. Dividend, EV, myself, we're all sitting here buying. So when we woke up and we saw all this stuff happening, we just had to smile. We're like, oh, here we go. Here we go, just what we anticipated. Everything's going according to what's anticipated. That's why you have to be in the game. You don't get many opportunities where you can buy something near 52-week lows and then have a pop of a 20%, 10, 15, 20, 25% increase in one day. These are the 1 days that matter. That's why you have to be in the game. I have a feeling that the overnight market, let's go check. Hey, Eric, did you see the new story? No, I can't see it until after, well, maybe. It all depends on if I can get in. Now they are predicting 4 or 5 rate cuts this year. That's talk. Okay, listen. The reason why they're saying that is so you go and buy more shares of stock than you should. They are not doing 4 or 5 rate cuts this year. Just because the stock market lost. Okay, again, let me do something real quick. I'm going to say this again. You have a stock that's $100 per share 10 days ago. All right? The 52-week high was $120 and the 52-week low is $75. All right. So you sit there and you have a $100 share, one stock. You bought it and it's $100. That's your dollar cost average. So in the last 10 days, you saw it drop to 95. You did nothing. You saw it drop to 90. You did nothing. You saw it drop to 85. You did nothing. You know what's funny? This is almost like AMD is what I'm talking about right now. This is how funny it is. You saw it drop to 85. You did nothing. You saw it drop to 80-ish, 80. You did nothing. That's 20 basis points down, and you sat there and said, I don't need to worry. Now, all of a sudden, there's an announcement, we're going to pause tariffs. Next thing you know, it goes back up. But all those who were buying down to get their dollar cost average at close under 85 or more, you are doing the damn thing. So when the thing went up 10 to 15% and it says 94 or 95, the people who were buying at 85 you have a 10 to 12 to 15 point increase in value of your stock portfolio. So now at 95, you're still winning. You have a huge smile on your face. So what do they do next to manipulate the market? They do what EV Place is saying. They go, oh, hold up, guys. We might do 5 rate cuts this year. Based on what? You still haven't gotten back to where we were before, but it's a good storyline to keep the rally going. So now more people are like, oh, you know how people are. They're like, oh, I want in now because it's rising. Never mind, you lost this 10 to 15 to 20% increase. That's gone. So you're going to possibly get a 5% to 10%, maybe, which is fine. But that 20%, that 25%, there is no reproducing that. In order to get a 25% for the person that sat on the sidelines, the stock price, the person that sat there and did nothing, the stock price has to go to 125 now in order to get 25%. But if you would have got your dollar cost average down to 85, when it went back up to 97, you got 12% almost, thereabouts. And now if it goes up to 120, you're going to have damn near a 40%, 45% increase. You don't even have to get to 125. That's what's happening, ladies and gentlemen. It's a monetary game. So when you see these type of things, there is no 4 or 5 rate cuts. Guarantee you, it's not going to be possible. There's nothing substantially that has changed at EV Place. Imagine having rate cuts plus tax cuts. Inflation will, and to get up some more before that happens. But if that happens, market will go boom, 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 boom. Yes, exactly. They're not trying to do that yet. You guys have to understand, this is a long-term play. If you do tax cuts, let's say next month, and let's say there's a somewhat of a rally. Let's say not really a rally. The rally happened today, but let's just say the market moves 5 percentage points overall in the next month, right? If you do a rate cut and then they have another boom, just because it's a rate cut, again, you fundamentally have not done anything to improve the situation in America. It's artificial. So after that time, now they're going to do it again. Then they're going to do what post-retirement travel is saying, tax cuts, tax breaks. But tax cut, tax breaks bring in less revenue, right? So now you're hurting your citizens again. And so, yes, there will be an influx because the wealthy will have a lot of money at their disposal to spend on the stock market or real estate. So you'll have this going up. But soon as there's nobody else left, you have a collapse. And that's why 1 year, 8 months is going to happen. 3, it's actually longer than that, but I'm trying to give you guys a runway. I want you to have your stuff in a row at 1 year, 8 months, not 2 years, 5, because it's going to be around that after the 1 year, 8. I just can't tell or figure out if it's 6 months later or a year later. So I want you guys to be ahead of the curve, just like always. So then that way you're going to go, okay, Eric said 775 credit score. He says, this is what's going to happen. We got 1 year, 8 months, invest, do what you got to do. And after that time, you'll have yourself in a position where you'll have passive income coming in, you'll have a portfolio, and you'll be able to dictate what you want to do. You're the CEO of your life. There you go. No fear, ladies and gentlemen, no excuses. This is the time that you're going to find out about the millionaires being made in less than 3 years, who previously were not millionaires. There's going to be more millionaires and billionaires from last year to the next 3 years than any time in history. All right? Bold statements, I know. Don't worry. These videos will still be up even after I retire, so it's all good. Post-retirement travel, I'm ready. That's right, we're ready. You guys are ready. You're right, you're ready, because how are you going to help VOO and you paid $460? Sorry, not 460, it didn't go down. 475, 480 VOO, right? How many of you got VOO at that price point? VOO, when this is all said and done, is going to possibly be near 600 3 years from now. All right. Apple. Did you get Apple near its all-time 52-week low? Not all time, but 52-week low. Were you in on any of these Magnificent Sevens that they were within 10 percentage points to 15 percentage points of their 52-week low? Do you really think that in 3 years they're going to be anywhere near that? No, because of inflation. They're going to be able to charge more money, their corporations, for their products. Therefore, their profits are going to be higher. Therefore, they're going to manufacture their own increased value. So again, this is manipulation. Don't people see this? It's an easy game to play. You don't even have to understand the stock market, but you do have to understand finance a little bit. You have to understand what's happening, the global world and what's going on. This is not an American thing. This is a worldwide thing. I'm ready. We should all be ready. Joe Nay, another investor's in the house. Welcome to the SSN Nation Wealthy Wednesday night live stream. Boom, Joe Nay. Did you get some of that love? I know you did, because you're a smart person as well. You're in the house. You were in that stock market house going the salsa dance in the morning. You're sitting there like, oh my, this is going as planned. I love it. So once again, what's good, everybody? How is everybody this evening? Joe Nay, you know how everybody's doing. You know how people are doing today. You're in the stock market. You know what's happening. Now, can you imagine if the stock market went boom and the real estate market goes boom at the same time? Stay tuned, ladies and gentlemen. I love it. I have been to that club in the DR many times, Jet Set. It is so sad. Let me tell you, the drinks there would cost you $20 each. I know. People that went there were politicians, MLB players, and company CEOs. I know it has a reputation. I've never been there. But yeah, and it's been I think it was a movie, was it a movie place before? Then it was a restaurant. It's been many things. But the one thing is degradation. Can't replace it. Nobody was doing any upgrades. This is just like in Florida, the condos. It's been there for 30 years and you do nothing. That's literally what they do. Speaking of material degradation, I have to rebuild the whole wall of my garage because the weight of snow this winter in Massachusetts. There you go. Exactly. 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 Stock market. Like a slinky. Exactly, Joe Nay. But you got to be in the game. We talked about it. Okay. Let's see. U.S. Federal Reserve to hold closed meeting after Trump calls to cut rates in tariff blitz. I understand that's a bad sign to people. If they cut the rates, this is not good. I'm just going to say it like it is. Inflation is not going anywhere. Other countries have already implemented their tariffs. The items that come to America is going to cost more. People are already living paycheck to paycheck. There's no manipulation out of pockets. If people don't have money, you can't make them buy anything, regardless of rate cuts. Oh, and a rate cut's not going to help you because, okay, first of all, mortgage rates go by bond rates. Remember last week when bonds were going under 4%, they were going down to 3.9, 3.8, the 10-year. That is bad for America. You guys, America gets money from outside of the United States, from the rest of the world who buy bonds. If they do not buy bonds, then the Federal Reserve cannot print money. So let me ask you, just like you, if you have a choice to put your money in a CD and you go see a CD that's 3%, you see another CD that's 4%. Does it make any sense to buy a CD at 3% when you know you get a 4% return? That's exactly what's happening. So when that started going down, this all is signals being sent. This is why Trump and those guys had to say, hold on, we're pausing, because there was drop. And oil is what we use. The dollar is backed by oil. They still have the dollar transactions for oil. So people don't understand, when the oil is going down, the value of oil is going down. That also means There's transactions that are or are not happening. And that devalues the US dollar. People do not understand the dollar is backed by oil in essence. So everybody's going, oh, oil prices going down. The gas prices at the pump are going to go down. Those are two separate entities. That does not make it so. So therefore, they had to do this today in order to stop the bleeding. So that means we can reset the bonds over 4%, 4.2, 4.3. That's what the mortgage rates are going to be based on. Federal rate cuts not going to have an effect. They're still now going to have people, the governments from outside the U.S. invest because they're saying, I'll take that 4.3. I'll take that 4.2. I don't give a crap about 3.8, 3.9, but that 4.2, 4.3, I'll take that. And that's how we're able to print money. Now we're printing money, which devalues your currency. So you're defeating the whole purpose. There's no gain here. So you have to talk a good game. You have to do this. We're going to do a closed door meeting. We're going to have the feds talking, yada, yada. We're going to have you know who come out on CNBC and every other financial channel, Warren Buffett. We're going to have all these billionaires come on and say, hedge fund guys say, oh, yeah, this is. They need you to give them more money. They don't want to spend all their money. Come on. When you guys going to get this? So when the stock market was going down, ordinary citizens are going, oh my God, I lost 15%. I'm going to sell. And the rich guys are saying, thank you very much. Because we really didn't want to pay $490. We didn't want to pay $500 for VOO. So thank you very much for allowing us to pick up VOO for $476. I appreciate that because $476 to $500, we like that. Because we bought $100 million worth. Thank you so much. You guys get the game yet? This is how they're preying on unsuspecting individuals. But not here. Not the SSN Nation members. Yeah, that's no surprise. They're going to keep milking this. This is what they do. All right, Joe Nay says Scotia, Banesco are not entertaining loans unless you have over a 720 plus credit score. Well, there we go. There we go. In fact, Joe Nay, I'm glad you brought that up because that is exactly what I was talking about. This is why you need a 755 and up, ladies and gentlemen. It has nothing to do with if you're going to buy something outside of the USA, but it has something to do with if you're going to buy anything anywhere. Because there will be a credit crunch. Because you can't keep giving people loans on currency that's being devalued. Just keep that in mind, all right? Thank you for mentioning that. See, this is where we're going, ladies and gentlemen, and DR is in the same boat as America. DR doesn't have enough tax revenue, so they have to borrow money. So that devalues their currency. So therefore, they can't go over here and they're not going to, first of all, if I'm a bank in the DR and I'm just allowing people to get loans and I say, oh yeah, you can buy this over here. I'll give you a $50,000 loan, right? In USD. The USD goes from 59 to 1 peso to 62. That's 3 DOP. That's not quite 10%, but it's 6 or 7%. So if you have that situation going on, now all of a sudden, I'm not getting as much money back as my 9.5% interest rate. You understand? There's a reverse going on. That's a problem. So this is why they're not going to let people have credit scores below 720 now. And it's probably going to increase because their values that they have to borrow money at is not 1, 2, 3%. They're not part of the United States system or the IMF EU system. So therefore, they got to pay like 6%, 5% for their loans at 600 million, at 1 trillion. That's a lot of money. And their bonds are only like 90 cents, 80 cents, just to give you an idea. So nobody's investing in the DR at a substantial amount with only a freaking like 2% or whatever percent return and 79, 80 cents or whatever it is for their bonds. That's not, you're not making any money, so people aren't investing. You guys have to understand what's going on a little bit. I'm trying to explain. I'm probably rambling to a lot, but some of you may understand what I'm saying. All right, post-retirement travel says my brother bought 100 times Tesla shares this morning at 2:30 and sold them at 270 before closing, making 4K profit in less than 7 hours. Not bad. He's too aggressive for me. No, I love that. He wants to be aggressive. I love the aggression. He knows what's happening. He said, you know what? This is what Gino Chimiente used to say. Give me my 20%. I'll take it and run. So once again, 230 to 270, what is that? 10% is 23. 20% is 46. 230 and 46 is 276. So he did what Gino Chimiente would have done. Thank you very much. Give me my 4K profit. I'm out the door. I appreciate it in one day. There you go, ladies and gentlemen. There you go. And this is how the big boys play. That's why they were going all out crazy today. They're like, give me all that low stuff that we've been buying for the last 7 to 10 days. They were just like, fine. And then when he did what he did, the United States president says, pause. All of a sudden, boom. And this is exactly what happened. The wealthy just got wealthier, while those of us on the sidelines, what can I tell you? You lose. All right. Thank you for that. All right, ladies and gentlemen, I'm going to have to do, oh, here we go. Eric picked up some Bitcoin and ETH. Okay. I picked up some YBIT, YBTC, and Ethereum. I couldn't believe it when I saw 14,777. I'm like, wait, is this for real right now for Ethereum? So yes, I did it a little bit different. I didn't buy Bitcoin directly. I just used the derivatives because I want the option income money. I want the 60, 70, 80, 100% return or distribution. So if you put in 500, you get 500 back. And you're still going to have a stock value at some sort of price, whether it's 350 or 400, but 100% distribution back after a year is still 100% distribution. And if that's 300, that's 850 bucks. Most people will take a 60% return annually. There we go. That's how I do it. Just letting you guys know. Great move, Brian P. I like it. Joe Nay, imagine if the administration can put their person, yes man, in as the Fed chair. That's not going to happen, I don't think. But if they did, oh man, ladies and gentlemen, the 1 year 8, I might have to move it up. If you think you have 1 year 8 months left, if that happened and you burn through your currency, then you're going to shorten that time frame to 1 year and like 4 months. That you're going to have all your ducks in a row because you're going to be devaluing your currency with the federal funds rate, and inflation is going to kick up. It's going to be bad because people are going to borrow, not people. The wealthy are going to borrow hundreds of millions of dollars to go buy assets. And so that gives them an advantage, and ordinary citizens are going to have to pay more money for everything, and you can't afford it. Let's just keep things real. Eric, did you know U.S. has National Cheese Reserve? No, I did not. And nor do I know why. Post-retirement travel. Eric, have you noticed your bookings going up lately? Yes, I've had more people starting to do some things, but they're not like they used to be for me because I'm in tourist areas. I'm having more people who want to do something within 2 weeks. Not like 4 months, not like 5 months like it used to be for me. Again, I don't mess around with Orlando anymore because there's so many properties available and you're competing, and I have condo hotel timeshares and there's so many of them, and you're competing. Even with a water park, you have no advantage because other people have water parks. There was an advantage at one time, but now there's not because people are up the market. So that's where it's coming from. So for me, so I'm not having any real upside, but I am having shorter time frames. Like somebody wanted to do May 18th through 20th in Vegas. That's about the time frames I'm having, or less. May 15th through the 18th, or less. So see, that's over a month away. So that's the most I'm getting. Before, it could be 4 months, 6 months, 8 months. Now it's people going to Hawaii, like on the 30th, March 30th. They're like, it's March 28th, talking about, can I get something in Hawaii, kind of thing, you know? But I can't even use our Orlando home. I'm hoping a bad economy doesn't put a pinch on those bookings. That's a good problem to have. Yeah, it's a bad economy regardless of the stock market. Remember, stock market's not Main Street. People are still getting laid off. Millions of people have been laid off already in the first 3 months of the year. Joe Nay, EV Place, that cheese place is several feet under the ground in Missouri. I was surprised when I saw it. I don't know nothing about this cheese reserve. Eric, I'm sure you are, but please consider taxes with those high yield dividend ETFs. I rearranged my portfolio and some have sold to them. They weren't tax efficient for our financial scenario. That's right, because you are in a different bracket. Now you have to go for the YieldMax ETFs may not be the best. This is why I was hollering when there was the VOOs, when they were that when there's these stocks, that these portfolios, these ETFs that go down and they can work a little better for you. This is why I was hollering about you gotta buy, you gotta buy. Remember when I was saying that the Apples and all these guys, right? I was like, how can you sit on the sideline? You have to have a part of this under some sort of scenario. Whether you've got the SPY, the QQQs, the VOOs, it does not matter. But yes, depending on your tax bracket, which you're probably in a tax bracket unlike 80% of the people, so you're going to get hit with a higher, but you've done the best thing you can do. You had to rearrange your portfolio, sold some of them. They weren't tax efficient for our financial scenario. So this is why 13% on your money, JEPQ, I like it. 11%, 10%, 13. It can't always be this crazy 60, 50, 40, 30. But on the offset, I want to know, on the offset, when you had those high yield dividend ETFs, like a YieldMax ETF, you actually had a buy price for your shares. So are you saying you sold your shares because then you count that as a loss, which offsets your dividends that you received, right? But you would have to sell though, which is, a whole nother thing. But yes, you are correct. I could see where that could be a problem depending on which tax bracket you're in. Brian P., Department of Insurance, to hear State Farm's justification for rate hike as high as 38%. Wow. Stephanie Sierra, image by Stephanie Sierra, KGO logo. Okay, Tuesday. Yeah, they're all going to be doing this because they're going to get approved. It might not be 38%, but they'll get approved for 15, 18. That's going to happen. Oakland, California. Yeah, it's going to happen, man. This is the thing. This is Main Street that's happening right now. People are going to have higher insurance rates, higher HOAs, higher everything. It's not like Main Street changes because of the stock market. The stock market is manipulation. That's why they're saying closed door meeting. That's why they're going to have Buffett on. That's why they're going to have Kevin O'Leary on. That's why they're going to have Cuban on. But everybody has their investment strategy. They're going to have the hedge fund guys on to keep that bull run, bull sentiment going. But Main Street doesn't watch financial news networks. So they're just preaching to nobody or the people that are wanting to invest. But you guys, if you've done anything in the last 7 to 10 days, you didn't have to do anything else. All you had to do was buy in the last 7 to 10 days. You will be fine. Even if you did nothing the rest of the year, you're going to be fine. Because you bought dividend stocks, you bought ETFs. Your portfolio is perfect. You set yourself up. We've been talking about it here. So once again, ladies and gentlemen, depends. Now, Post-retirement travel is in a different bracket. He has different things. Remember, he's retired. So he's going to have, I don't know if he has Social Security coming, which wouldn't be major, but I don't know if he has a pension coming, but he has rental properties that do very, very well. He's going to do his 1031 exchange, which was a very, very smart idea. And so therefore, he's in a different tax bracket. Again, tax brackets matter. And what the problem starts being is when you're in a certain tax, a midway, right? You're doing fine. But the problem is when there's a difference between doing fine and then the millionaire boys club, multi-millions, where your accountants are going to restructure you a whole different way, versus a person that says, yes, I have 100,000, I have 150,000, I have 250,000. They'll do, you can't do what the other guys can do in mills. That's what the problem, you're in a tweener, so to speak, is what I call it, where you're still looking at your tax thing like, damn it, why couldn't I get damn near zero? What is this freaking 18% I got to pay? That kind of thing, right? All right, let's go. Yes, I sold some of them, but it was this year, so I'll take the loss on next year's taxes for 2025. We had to pay $15K on top of what we normally pay every year because of these dividends. Okay, but post-retirement travel, you got to give us the other side of the fence. So you're going to have to divulge something. So you're saying we had to pay $15K. Okay, well, if you had to pay $15K, then that means the ordinary income is what? Right? You're going to have to come out the closet. So that means there had to be a substantial amount. In order to pay $15K, you would have to have more than 50, more than 60. I'm just saying. All right. If you were holding, yes, it should be something like that. That means, okay, so you say, okay, Eric, I have 15K, but I made 45. I mean, I'm not going to be heartbroken here. All right. You were in the game. You made X amount. It would have been zero if you were not in the game. And where else were you going to get that return? Is that duplicatable? In other words, pay less to make more? I don't think so. So, yeah, I know it wasn't nice, but it's a combined situation because you're an individual. You're not a corporation. You're an individual. So that matters as well. In fact, I'm looking into do some restructuring myself. And I got to talk to a planner for something I want to do for long term. And I'm going to be going over what post-retirement travel is talking about, because going to have to put ourselves in a position, because the stock market is going to come in heavily over the next year and 8 months, where there's going to be this outbreak. And I want to make sure I can put it into some sort of an account, whether it's business-wise, 401k wise, a Roth IRA wise. I'm trying to figure out the best thing to minimize the taxes. And unfortunately, I'm a tweener, and I don't think I'm going to be able to get it done. I might have to be paying some crazy number. Cali and New York are negotiating trade with other countries, bypassing the federal government as the world turns. Fifth largest economy, which is crazy. Cali ain't playing games. Joe Nay, Cali never had to play games. See, that's the thing the whole time. So when there's a federal government that's hostile to one of its own American states, then you start going, well, actually, you really don't have anything you can do, because we can just do our own. And Cali's exercising their state's rights to do whatever they want to do. And quite frankly, you pay more money in Cali anyhow. So Cali can't be going up with this freaking 20% tariff increases, 10% tariff increases. That's insane. They're already paying more, and paying more to the federal government to help pay for these states that are losing money. So this is what the smack in the face is. You're sending money to Washington to help, 3, 4, 5, 10 other states, because they want to have free taxes for their citizens. They want to, don't want to do infrastructure. So, yeah, they're going to get some more money into their coffers. Meanwhile, that's effed up. That's effed up. It's almost like this. There's three houses on the street, your house and your two neighbors. Your house, because it rents out money and it makes profit, and because the other two homeowners do not make profit, this is a rental pool, by the way. The other two neighbors don't make money from their houses. They have repairs. So they go to the HOA and say, hey, can we get some of those federal funds? And then you contributed to the federal funds, and that's how they're getting the money. And then they have nerve to talk shit. Like, oh yeah, Cali's bad, this, that, and the other. But meanwhile, there's a lot of states that would not have any federal funds if it wasn't for California. New York. This is hilarious. So that's why I'm like, what is wrong with people? They're like, oh yeah, we want you to be. So now they want your house to not make money, not realizing their houses aren't going to get any federal funding if we don't make money. So your infrastructure, whatever you need to do at your house, you can't get done. And the funny part is, I don't have to. I don't have to send you the money. You're sitting over here talking shit. This is crazy to me. That's what it's like in America. Instead of Americans working together, they're all talking smack. Well, we don't charge taxes to our citizens. Okay, that's great. How much are you giving into the federal government then every year? Let's talk. We don't care about education. Okay, well, fine. But you're getting federal funds for education. You don't care about your roads. Okay, fine. But you're getting federal funds for those roads to repair and build. Meanwhile, you're saying, oh, but we charge less in our state. Of course you charge less, because you get to sit there and collect welfare. What are we talking about here? I mean, this has driven me crazy for the last 50 years. Listen to people say, yeah, costs less here, this, that, and the. I'm like, of course it does. You don't even want to build infrastructure. You don't want to have schools. You don't want to have free lunch. I mean, come on, man. This is crazy stuff. All right, enough. The political type stuff, but it's not really political. It's United States. United States citizens against United States citizens as well. We received about $25K in dividends. The problem is both of our military. I didn't realize my mom had a military pension. And oh, Jesus Christ, man, you way over. Both of our military pensions, VA pension, 401k pensions, plus option trading income, which was another hit. Taxes, God, dog, man. You're getting 1099'd out. You don't have any way to hide this other than the rental properties, and the rental properties can't hide when you're making, oh my God. When you're making like splitting up $100,000 in profits, and you're already probably capped out on your annual, so now you're going into plus. Okay, ladies and gentlemen, what I'm trying to get at is when you make a certain amount of money, even if you're married, you have to pay a capped amount, and then if you make 165, 200, married wise, now all of a sudden you're paying the high end tax rate and then plus. In fact, I wish I had I wish I could put this on computer. So they're in a tax bracket in the tweeners. This is what I'm saying about tweeners. They're in a tweener situation, and they're not going to like paying taxes because they're not in the millionaires club where they get to write off a lot of stuff and borrow and do all this. So therefore, they're fixed. They're fixed. So imagine you have a 50,000 coming from one, 60,000 coming from another, times two. And now all of a sudden you're in this 250 to 360 type of overall income range. And now they say we want 40%. See, that's where this goes. We want 35%. So it seems like you're giving them Oh man, $100,000 or more. And depends on if you're, now imagine this. He lives in a state that has no state income tax. Imagine if he lived in California. Add another 10%. Add another 10% if you think that's bad. So let me bring you down off the cliff. You live in Florida. You're not a resident of California, where you would have had to pay about at least 10% more. So let me bring you off the cliff. All right. Come on now. Come on down from the cliff, man. It could be a lot worse if you lived in another state. Let me bring you off the cliff. You're going, Eric, hey man, I had to pay like 50K in taxes. Oh man, what if it was 65? What if it was 65, man? If you lived in Cali, it would have been 65, 70. You wouldn't be like, you'd be really bitching. But then again, infrastructure here is different. All right. Wow. Exactly. Brian P says exactly. Yep. Uncle Sam don't play. That's why I like using borrowed money. Exactly, Biznessa. But see, you're in the business. He's locked. Him and his wife is locked. If he's talking about they both have military pensions, both have 401k, both have, that's all taxable. They can't do anything. They're in lockdown. You have to be like Musk. You have to be like Biznessa. You have to borrow. Then you make money for your business. Now that's a tax write-off. And even if you own real estate, you can only do so much. And in his case, I hate to give people, and I'll just give you a number. I don't know if this is the real number, but if you make $100,000 a year from real estate rentals, you have a tax situation. And you're going to be able to write off some things because, of course, it's a business. But even then, if you end up going, okay, we made 50,000, there's still a tax liability, especially when your overall tax is going to be over $200,000. So you're in the plus category, unfortunately. So that's where it all goes, ladies and gentlemen. You don't understand. It's pretty hectic up there in the nosebleed section. Ted Hampton, I took a dump. Welcome to the SSN Nation Wealthy Wednesday night live stream. I got clobbered before, and I learned my lesson. I turned into my genius, the seamless genius. I turned on my genius. Exactly. Wow. Post-retirement travel. Exactly, man. And that's crazy. Yeah, they have pensions. That's a tough one. Exactly. No way around it. No way around it. If you have property, you can depreciate to save taxes, but in our case, it didn't make a difference. I know California will never see me. The only way is to add dependents or business. Exactly. Just imagine whatever you paid, add on like another 15%, man. 10 to 15%. That's how crazy it is, man. And more, actually, it's even more than that. Because your overall, you would have been also got by the state of California for making over whatever for both of you. And all the 401k and all the monies. Yeah, man, it would have been bad. It would have been bad. My single daughters get clobbered. They both make over 6 figures. That's why I got them an LLC to get some write-offs. Exactly. That's what you have to do. But again, this is why I find it fascinating that when you're working for somebody, they tell you, oh, get a job, get a 401k. You're going to get a pension from us one day. And then after people retire in their 60s, or that used to be the case. In their 60s, they retire. Then they get their tax bill. They get a 1099. And next thing you know, they're like, what is this? What's happening? What's going on? I thought I'm 60. What are you doing taking all this money? And they're like, I'm sorry, you're in this tax bracket. So this is why you have to pay 20% or 15% or worse, depending on what state you live in. So, hey, great job there. But there's also there's also a problem when you work for somebody else. You work for yourself, make 6 figures, you can do something. You work for somebody else who makes 6 figures, tax man's not kind. But if you do work for somebody else, then you're going to need a business to do an offset, like what post-retirement travel was saying. So he has his business in the real estate game. He gets some, depreciation, but that depreciation only carries you so far. You don't get to do what Trump did, get a loss of what was it, $1 billion, and then carry it forward. So see, that's where the problem comes in. You don't have that luxury. You don't get to go, oh, I lost $1.5 million. So therefore I can take $100,000 off my taxes every year for the next 15 years. You don't get to do that. That's the problem. That's the problem when you're in the tweener stage. But what can you do, right? Exactly. That's it. Okie doke. That's it. That's how you got to do it. Hey, that's why the tax code is catered toward people that do business. It's not catered for people that work for other people in reality. They get you all the time. So when you work for yourself, then you can manipulate the system a lot better. All right. So just keep that in mind. And yeah, you're going to get in trouble with the IRS. Let's just put it that way too. All right. When you start trying to do all this, because it's easier when you have a 1099, all this. But when you start trying to do the other stuff that you're allowed, they start going, okay, we got to go talk to this guy. He needs to come in and chit chat. Or they'll send you letters. Yes, you have to learn that sweet spot. And I love it. Exactly, Biznessa. Exactly. It takes time because there's no real playbook, because the incomes are different, and there's so many different things that can be done. So anyhow, ladies and gentlemen, the stock market that went boom today. Let's see what's been happening after hours. Oh, there's been a calm down. All right. Here we go. S&P 500 futures rise after historic rally on Trump's tariff walkback. Yep. The bully was like, oh, wait, I can't really do anything. My pants are down. My stock market's losing value. My dollar is losing value. My oil prices are dropping. Oh, this is not good. My bond markets are dropping. Oh, this is bad. US 10 years back up to 4.285 after hours, ladies and gentlemen. Down from 4.3, almost 4.4. Crazy. Yep. All right, Biznessa. Seamless genius. Keep receipts and records. It's a science, exactly. I picked up NVIDIA 95. I love it. Because you know what? NVIDIA went to 114. Remember on Monday when I said, hey, guys, are you actually going to let NVIDIA slide at 86.6, 86, 85? Really? How can you not get in? That's the perfect example. Those who bought and got their dollar cost average under $90. When it went up to, in fact, let me see, go look at it right now. It's probably one of the big movers for the day, right? AMD, let's see. We don't have, NVIDIA is not one of the big movers. When you had NVIDIA stock, is at 114, plus 8, almost 20% today, plus 18 today. There you go, ladies and gentlemen. Just 2 days ago, you were under 90. On Money Making Monday, it was under 90. Imagine being able to buy something at 88, and now today it's not at 98, it's not at 108, it's at 114. $25 price increase to get 20% return on your money. Come on, ladies and gentlemen. Come on now. Come on. Let me go look right here. Come on. Wait. Where are we? There we go. Come on. Oh, 52-week low, 75.61. Low today was 97.53 allegedly, but you know, this thing goes up and down. So again, on Monday, we were talking 86, and somebody said, oh, it went down to 85. Great. If you bought at 85, even better. I bought at 86.06 or somewhere thereabouts. So any of that price, and so when it went up to 95, 100, that meant we have a higher jump, because now you're looking, you bought all those ones you bought at 86, 87 jumps to 100. You're sitting there with the green, like, it's like, holy smoke, what happened? Really? $15, $14 increase? That's incredible. That's a 20% increase. And then when it goes to 114, that's even, man, is that like a 30% increase? 35? Traditionally, you're supposed to sell and see sayonara. But this is a long way from the 52-week high of 153. So again, this is crazy. I missed out on it. Sorry to hear this, Brian P. I know you're very, very busy. Business, good for you. Get up to 100 shares and start doing call options so you can accelerate your gains. All you need is 100 shares to start doing call options. Exactly. That's it. That's it. So there you go. I don't know how that works. Again, I'm not a student of the option income markets. Again, I wish I was, but I never was able to get it and study it and figure it all out. So this is great news. I'm still looking for that video post-retirement travel. That'd be helpful. That'd be real helpful. All right, ladies and gentlemen, I'm going to wrap this up tonight for the big parade. I want to thank everybody for being here. But once again, this booming market, and they're going to ride this. So there's going to be an uptick. All right. Even what's been happening? Like, I expect tomorrow, not anything crazy, but I expect tomorrow to actually do an uptick, because they're going to do the old rounds. People are going to say things like what EV Place said when he said that they're going to have a emergency meeting, which I don't even know if that's true, but if they do, they do. But that helps people out. Look at this. AMD today, 23%. Amazon, 12%. Microsoft, 10%. I mean, this is just incredible. And if you were not in the market and bought at the lower price, you would not see any of this. Ordinary citizens are generally at their job working. They didn't do anything over the last 2 weeks. But if you did, and you got your dollar cost average down, then you were part of this 20%, 12%, 30% price increase, and your charts are looking sweet. And imagine that you get dividends to boot. That is what makes this special. That's what makes this special. Almost there. I have 75 shares. Well, excellent. And you got some of those shares at $95. So that's a great thing, because tomorrow it'll be $20 more per share. I'm pretty sure it's going to rise tomorrow a little bit more. I expect it, because there'll be an overage. People will still be excited, right? So now people are going to buy, thinking that it's all over. It's not all over yet, ladies and gentlemen. That's why I'm not going to buy, because I don't want to increase my dollar cost average. I'm just going to sit on the sidelines right now. I'll be like, if something still is near my dollar cost average, I'll probably take it. But I'm sitting on the sidelines for a minute, because I think there's going to be another dip opportunity, because the 90-day pause is going to coincide with the rate decrease, but the tariffs outweigh any rate decreases. All right? Just keep that in mind. Yes, I bought 25 shares. Very nice, Biz Nessa. Great job at 95. Beautiful work. Dollar cost average down. And beautiful work. What can I say? Great job. Very happy for you. Very, very happy to hear that. Great move. All right. We even have Biz Nessa on the stock markets making it happen. She's got a big smile on her face going, damn, I didn't know it was this easy. Well, if the government actually does this F-up moves, it's real easy. And more F-up moves are coming, because it's only based on what they have to do to keep things in order. They have to do rate cuts. Have to. That's the only way you're going to make the housing market, which is the #1 most expensive product that they can sell to an American consumer. So if they can get that into a manageable position of a 4.2, 3.9, then that'll start moving homes and getting loans. And that's where our ORCs and our PSECs and AGNCs and all that, everybody who's getting their 16 to 23% dividend rate of return right now because those stocks have been taking a hit. Best believe if you haven't positioned yourself in those shares, when they reduce the interest rate, you do understand that helps the Federal Reserve I'm talking about and the bonds. When that comes down, you do understand the real estate investment trust value increases, right? So their stock price could go up. So you're not going to be privy to 16%, 18%, 20, 23% returns. The returns are going to go down as the stock price goes up. So locking in the price now when it's mayhem is great. That's another reason why you have 1 year, 8 months. Because in 1 year, 8 months, the housing market could have an incline, which will put it out of reach of 90% of Americans at this point. Everybody has to stay pat, right? So you want to be in that. Thank you very much for giving me my 18 to 24% for life. That's what you want to be in, right? So go check out. If you think they are good, you have to, this is a thread in the needle, but ORC, AGNC, PSEC, I mean, it's a MFA, I mean, NLY, I mean, all these are like 15% to 23% right now. If for their dividends. So what you really want is their stock price to stay somewhat level or rise, and you're willing to take the 20% or 18% or 16%. And an average of 18% is awesome. For life, potentially. This is what we're talking about. So again, in fact, let me talk about this again because AGNC, let me see what happened today. Went off the charts today. Yeah, but it's $8.90, and it's at a 16.16 after today. This is crazy. The 52-week low was $7.85. It just happened today. This is crazy. Crazy. So it goes from $7.85 to $8.90. So a dollar, which is, if you would have bought it $7.85, 20% damn near return or something. Not 20, but 15 or something. And that is insane. And and if you would have got it $7.85, it was higher than 16%. That means it was in the 17s. I mean, that's AGNC. So when I didn't even know Apple had a hospitality REIT. Are we serious right now? 14% increase today for the Apple Hospitality REIT, which I don't even know what that is. Dividend yield is only 7.8, but it is what it is. I don't even know what this is. $12.19. I see this. That is oh, I forgot about EPR, but they're bleeding. EPR is at 7.52. Forget that. So let's go. I'll just do this real quick, and then I'm going to go ORC, Orchard Island, or let's see what we got. It's only 646 right now. That's insane. 22.29%, ladies and gentlemen. And if you would have bought at the low price of the day at 5.6, if your dollar cost average is under 6, you're at 23%, by the way, for ORC, as long as they're giving out that dividend. If they're still giving out dividends, when they reduce the federal funds rate, that means your dividend is secure because there won't be volatility going down in the stock market. So that makes things totally different. So there you go. You can also open an HSA account to help, but no, I ain't going to help. But in our case, we have military TRICARE, so we're stuck for life term. Open a Roth IRA. Don't do a traditional one like we did. Oh, no. Oh, no, you did it. Oh, yes, that's a huge mistake. Without having a Roth, now you're paying taxes. Oof, that's rough. On the withdrawals, that's heavy. Yes, if you're going to have a IRA, ladies and gentlemen, make sure you have a Roth, okay? I could have got a few days ago. It was around 90, almost 89, but I jumped. Yes, Biznessa, I know this is what the thing is. You're going, oh, but here's one of those things from a mindset of an investor. You have to go like this. While it's down, is it worth me waiting to find out, or is it worth me waiting to lock in this price because it's already low? And should it go below that, I'm willing to buy more. That's the way you have to think on a downward trajectory. At least that's how I think. So yes, I bought at 89 too. But that's because my dollar cost average was 100 at the time. So I'm like, oh, yes. And then when it went to 86, yes. Then when it stayed at 86, yes. 87, yes, because my dollar cost average is in the 90s now. So that is why you had to pull the trigger. Think about it next time. Look at your dollar cost average. If it's below your dollar cost average, what are you waiting for? That's what a lot of people don't pay attention to. They go, okay, the stock has dropped 10%, but don't realize that your dollar cost average is still higher than what it dropped to, or it dropped 20%. And you're like, wait, my dollar cost average is higher than that. So now it's below what I bought for. I got to buy more. That, especially in today's environment on the stock market, especially the stocks we're talking about. When you're talking about Nvidia and Apple and Microsoft and Meta and Google and all these things, even Google, for instance, GOOG, again, ladies and gentlemen, a boom all day. Oh, by the way, there's a DX that we mentioned before, but I'm most excited about PSEC. PSEC back to 2020 levels in the $3 and something range. Unbelievable. But DX is at 17%, ladies and gentlemen, dividend rate. Right now at the $11.92 price. Now, earlier today, or was it yesterday? Yesterday it was. Yesterday I got some DX. Yesterday it was at, I can't remember. I think it was in the 11s. So I don't think there was any big difference between yesterday and today. But 17% return, ladies and gentlemen, for life. This is what I'm saying. I mean, how are you passing this up? This isn't like Yield Max ETF stuff where you can be doing 60%, 70% distribution. This is real estate investment trust. They're not selling the real estate. They're going to refi their loans to be able to squeeze out more profit when the Federal Reserve starts doing it. So starts reducing the federal rates and starts the bonds and all that goes hand in hand. All of a sudden, people are going to be like, oh my God. And now you'll have locked in 17% right now at $11.92. Can you believe that right now? I can't. I can't. I mean, this is like ducks in a barrel to me. So we'll see what happens. All right, ladies and gentlemen, I'm trying to think. I'm missing out on oh, ARR. I'm scared. I've talked about ARR before. And it's at 19% because of the rise today of 4.81%. Imagine if you could have bought this at $13. Again, ARR 20% more. I did not pull the trigger on that because I had ORC at 23%. So I was like, my dollar cost average, I'm dropping it. So why not buy some ORC at 23% for what I'm buying this at right now? 23% return. This is a freaking stock, right? So this is just crazy stuff. The PSEC, the ORC, the ARR. We've talked about all of these. You have every chance to get this type of return. You guys don't understand what a 15 to 20% return is. If you can get that for life in a lot of areas, you're going to be set because you're going to beat inflation 90% of the time. So all you need is to have it set. You can put this stuff in trust. So then this way, you can actually have income coming in for your trust and your loved ones for a lifetime, along with the Apples, along with the oil companies, along with some other things. So down the line, they'll last forever. Mergers happen. So what? The stuff automatically merges to the other company. And then you can't win them all, but you can win a lot. All right, just keep these in mind. All right, we're going to get into some of this later because I'm going to be doing some things myself because I started thinking about, okay, you know what I'm going to do? I've had my fun. I'm going to actually leave my daughters and family pretty good. I'm just going to be like, all right, I'm going to put in all this stuff into a wrap trust so nobody can really do anything. Well, somebody's going to be able to do something, but it's going to be structured the best way I can. So that way we're going to have people like the Rockefeller situation. You have money coming in. This person's born. You go, okay, where's your insurance? Which is cheap when a person is a baby or 3 years old or 4. So they have money 15 years later. But it's all going to be funded with the trust. It's going to be good to be part of the Bird family. All right. That's how we're going to do it. All right. So I'll be doing this myself over the next year. So that's when I'll be in retirement mode in a year and 6 months or a year and 4 months. Right. So we got a year and 4 months to go this journey. So don't want to mess around. I miss out on it. Don't miss out again, man. At Biznessa, good for you. Exactly. I love to hear that. Exactly. Great for you. Get up to 100 shares, start doing, oh, okay, I already saw that. Yes, Bart, thanks you guys for help. Hey, Biznessa, you know what they always say, just like when you're telling people something and people don't listen, right? So all you can do is be the messenger. There has to be a reception. That's part of the thing. You received the info, you paid attention, and you said, let me get my feet wet a little bit. Now you're like, oh my God, this stuff, now you bought it 95 and you see this thing went up pretty much $20 per share. And even if you bought 25 shares, that's $500 additional for doing nothing but buying at the right time, paying attention. But I mean, that was literally, pretty cool stuff. And what's even funnier is it's going to go higher. It's what's even funnier. It's crazy. Imagine when it goes another $20 up to 130s and you're sitting there like, man, I bought this at 95. Now I'm $40 per share over. Now you start going, wait a minute, that's an extra few thousand that I'm having in. Wait a minute, this is cool. And then when you get a little check, right, they go, here's a little dividend, 1% dividend or something. You're like, oh, this is cool. Hey, you helped yourself. You were listening. You received. That's what counts. Oh, I forgot about IVR. High risk, high rewards. Yes, I have some IVR as well. Even right now, after the boom, look at where it's at. 20% after the boom. Right now at $6.79, Ivesco Mortgage Capital. This is high risk, ladies and gentlemen. I'm just going to tell you like it is. It's high risk. But guess what the 52-week low is? $5.86. So $6.79 isn't too far away from the 52-week low. So I feel very good if you have IVR. And by the way, I have IVR. I forgot about that one, Brian P. Thank you so much. But again, I always treat IVR as like a high risk, high reward situation. Imagine 20%. That means you double your money every 3 years, ladies and gentlemen. Somewhere thereabouts. Let's use the power of 72, shall we? 72 divided by 20%. 3.5 years. Every 3.5 years, it doubles. I think you like that, right? Where do you sign up? Where do you sign up? And by the way, not only does it double, you could double, but you could also, in the reinvest dividends game, you can actually buy more shares. And unfortunately, that creates a higher price value. This is why when you have to go in sometimes and look on these down markets, because you're sitting there looking, going, okay, this is nice. But because we reinvest, my dollar cost average crept up. So now when it's below, you got to buy. That's the way I look at it. So just letting you guys know for the future in case something happens to me. I'm just joking. All right, exactly. You're right. Eric, here we go. You can also set up a purchase trigger in Robinhood. Yes, it is. I believe you can set up the quantity as well. This way you won't miss a good entry point. Thank you so much for that. I didn't even think of that. Thank you so. You know what though? I hear what you're saying. Here's the problem I'm having is that it's 24-hour market, right? Not everything trades at 24-hour market. And so it's like, oh, you have to wait till 6:30 a.m. I'm like, what do you mean? It's crazy. But yeah, I get your point. And buying at the time does matter. And I like what you're saying, because if you have the trigger already set, then it automatically buys. I like that. In fact, I'm going to go look for that, because there's something that I'm working on. Because once again, I'm paying very close attention to all the real estate investment trusts, the IVRs, the ORC, the AGNCs, the PSECs, all of that, the DX. I'm paying attention to all that, because right now 15 to 23%. And then you know what else I paid attention to, because I could not pass this up. I don't really care. Talk about really high risk, high rewards. This is even crazier. IEP, $8.43 today. It went up, right? It went up 8% today. But imagine it's still at 23.72%. Imagine before today, when it was 7.68, like yesterday, and seeing something like 27%, 30%. That's right, ladies and gentlemen. It was at 30%. Can you believe that? It was at 30 when I bought during the 52-week low. Can you believe this? Can you believe this? Intraday drop, then pops up. So again, these are the times you have to pay attention. And I like that Post-Retirement Travel said that, is because you can enter, I haven't done it, but you can enter a price at a low price, even well below what you see, and that triggers a buy. That's a very good option, especially in this environment, because if there's a drop like what happened, you wouldn't know it dropped. And if it's something that's below your dollar cost average and you say buy, then that triggers it. You win, right? So that's very, very good, man. I'm gonna have to check that out. I'm gonna have to check out. I will get some of that DX, Brian P. He says, get it. You're right, Victor. I have Robinhood. Yeah, I'm gonna have to check that out, because I might have to. Oh yeah, TWO, Brian P. Yes, one of the old ones we talked about. All of these are going to be in good hands right now, because all these prices should be low. It should all be 15% and higher. It jumped up 4.78. Yep, 15.79 after it jumped up. 2, TWO, thank you so much. NLY also is another one. But yeah, we talked about TWO before. 52-week low, $10.16. Today's low, $10.16, ladies and gentlemen, then jumped up to $11.40. That's crazy. That's crazy. That is awesome. That is freaking awesome. I mean, people are getting 15% or more on their money. And we were talking about all of these over the last year or 2 years. It's a beautiful thing. So thank you for bringing it up, Brian P. That's on the list. Here we go. Apple is flying freight loads of iPhones out of Zhengzhou, China. Yeah, I know. I heard about this. Private jet matters. They were like, okay, you want to play that game? No problem. We'll just use a United States airplane, go get the stuff, bypass customs. That's funny. That's funny stuff right there. I love it. I love it. See what the big boys do? They're delaying the Nintendo Switch 2. I wonder if this will raise the price. Yes, it will. That is crazy. IEP, exactly. But it's high risk, though. Again, these stock values can decline. IEP has its stock value decreasing, and I don't know why. They're in the fashion, the automotive, I don't understand why it's crashing, but it is. So even though it has that high rate of return, your stock value does decrease. So, but I like 52-week lows. If you can get close to your 52-week low, I like that. I feel a little safe. But Let's just call it what it is, because profit margins are going down, things are happening. So in the case of Two Harbors, even though you can get 15.79, the stock price could take a hit. These are the trade-offs you're going to get. So you always have to be cognizant of not just getting those. That's why you have to add other things. You have to have the Apples. You got to have the Nvidias. You got to have something else. I even shorted the market, like I told you guys last week, UVXY. It doubled. So I know it's short term because the market's crashing. So when it doubled, I did what you should do. You sell because it's volatile. If they have a date, because you didn't know today he was going to blurt out, we're going to do a pause on tariffs. As soon as he said pause on tariffs, there's a reversal on your UVXY. It starts dropping like a rock. So I'll take the double up and then use the double up to go buy some of these market lows. That's how one of the ways I do, just so you guys understand. We need some of these iPhones to sell. If you can go to China and you can go get some iPhones for $450, you're damn right. You should come back with them. I'm just saying. I'm just saying. I mean, it's sad what American citizens are used to. It's really sad. If somebody told you, well, I'm telling you right now, the iPhones, they actually make them for $300 to $350. And they're going to sell them for $1,500 in the United States and around the world, up to $2,000. So you could go to China and actually backdoor your way into an Apple phone for 300 and some bucks. Getting thousands of them, highly unlikely. But, Brian P. All right, ladies and gentlemen, I'm going to wrap this up. It's an hour and 55 minutes of bliss tonight. Does anybody know what's going to happen tomorrow? Kind of. The market should go up a little. Let's see what let's go see what the futures are saying. Okay. The futures are saying just pretty much it's level. I mean, we're talking about 0.06, 0.35. There's nothing crazy happening. But you understand that this ongoing tariff play means that we could have another dip, because all it takes is somebody that says, well, we're not coming to talk to you, President of the United States. Forget you. We're just going to keep our 34% tariff. We're going to keep our 15% tariff against you. Then he goes, okay, then I'm going to do the tariff thing. Then all of a sudden we have a dip. Are you going to be prepared for the dip? Remember that duffel bag of cash. Remember what I was saying on Monday and Friday when I said, this is why you just don't dump everything in. You want to piecemeal it, because there could come another time when all of a sudden you're over here buying, we'll use an example. You're out here buying NVIDIA right now for 110, 114. Then all of a sudden tomorrow they start going, well, you know what? I decided against the chip manufacturing companies in Taiwan and China. We're going to give them a 50% tariff. All of a sudden, NVIDIA is going to drop. Other companies are going to drop. And you're sitting there putting all your eggs, or a large percentage of your duffel bag of cash, into NVIDIA at 110, 114. Then NVIDIA is 97. And now you're like, oh, damn, I don't have anything to deploy. That's the problem, ladies and gentlemen. That's how they get you. So that's why you want to always have something left in the reserve tank. And you always want to have some dividends or some way to have extra streams of revenue coming in. So then that way you can also pile in if you need to. That's why you have to have the trifecta. You have to have business, you have to have stocks, you have to have dividend stocks, and you have to have real estate. That's why you need all three of those combinations, put you into a position that, like, I have to use post-retirement travel as an example. He's put himself in a position to have a lot of money coming in, and he gets to bitch about the tax situation. But I guarantee you this, at the end of the day, he's going to be very, very happy about the tax situation, because he still gets to be Mr. Worldwide. That's the difference. And he still has an upside. because he still has revenue coming in from several different sources. So regardless of the tax, he doesn't have to work to pay it. That's the difference. It's a whole different ball game if you have to work at a job 40 to 50 hours a week, and then you're worrying about your groceries and childcare and all this, and then find out that your prices of everything went higher. It's a whole different ball game when you have $5,000 coming in per month, $8,000 coming in per month. That's a whole different ball game. You didn't have to leave the house. You're not going to sit there and care that you have $10,000 coming in per month and you got to give Uncle Sam $2,000 in tax at the end of the year for every month. You ain't going to give a shit about that. You're not going to like it. And then when you get your tax bill, your 1099, and they go, oh yeah, well, you made an extra $40,000, and you got to give up $8,000 to that. Now all of a sudden you're like, damn, I don't like it. But the fact of the matter is you didn't have to work for it. You still can be Mr. Worldwide, travel wherever you want because you have revenue coming in. Yeah, and you're going to have to give up 30, 40% taxes maybe, but who cares? You worked hard, now you can play hard, and you don't even have to do anything. Just sit there. Exactly. It's a roller coaster. That's it. You just got to be ready. So that I like you only bought 25 and you didn't say, hey, let me throw a whole bunch of duffel bag of cash. Because again, 95 is better than 110. And so you benefit from it rising. So there's no real point for you to sit there and go from a $95 cost averaging, start buying at 120. Find something else that has a value. Find something else. That's it. Trying to be like post-retirement, making money like that. Brian P., you're in Mr. Dividend form. Now all you have to do is have the real estate form, which turns into business. Now you start acquiring some real estate. And next thing you know, you have a business with real estate and you have appreciation from real estate. So you get to win on a couple of fronts. That's how you build it rapidly. When people say, well, what do you do to build things fast? You get real estate and stocks. That's it. People, crypto, whatever. I'm not saying that. We can do high risk with crypto, yes. But if you want to actually do something within the matter of 5 years or less, in a down economy or whatever you call this, this could be the time that things are going to happen, and it will. 1 year, 8 months, you have to build wealth, Brian P. You have it at your disposal. Some things are going to happen where you're going to be able to grab some real estate. Things are going to happen where you already have grabbed stocks. That's all you need. That's all you need, man. All right? Send me an email. All right? Trying to be like post-retirement travel, making money like that. I use their money to make money, period. Exactly. That's exactly right. That's exactly right. I need some help on that, Eric. No problem. Hit me up, man. I balance very carefully, so me and Uncle Sam are good. Exactly, Biznessa. Yeah, me and Uncle Sam got a problem right now myself, so I got to deal with some situations, but it's all right. We always can get out of it because we have businesses, we have other stuff. So, but it's still annoying because this is like, it's so convoluted when you have all these different things that you're doing, and it makes it very hard. So you have to have a professional, and the professional just goes, well, we'll do it the safe way. I'm like, hold up. What do you mean the safe way? That means I pay more taxes. I'm like, what are you saying right now? All right, work hard and invest, and you too can retire one day and start traveling. Our biggest headache is deciding which country we're going next and planning all the logistics. It's hard damn work. I know, man. I will do that. All right, I look forward to hearing from you, man. Then we can get down to biz. All right, this is it for the Wednesday edition, the Wealthy Wednesday Night live stream. Make sure you guys come join me if you haven't already thought about it at the SSN Lifestyle Punta Cana Investors Forum in the Dominican Republic. Again, speaking of things that can happen, here's what's going to happen in the DR. Here's my prediction, just so you guys heard it from me first. You have a lot of people that do cheerleading. I don't do cheerleading unless you deserve some cheerleading. If I like you and everything's going fine, great. But even if I like you, everything's going fine, we still have an obligation to let people know the opinion that I have. Here's my opinion about the Dominican Republic. Because of the way the Dominican Republic messed up their curve, they had an upside, right? Going, right? So because of the way their infrastructure is, by not giving people the money they owe you, by not giving their realtor people that's selling for you the money, the commissions they're owed, by delaying payments, by not delivering on time, not building infrastructure, and then not being able to have a tax bill, which now requires them to borrow money from the rest of the world. And now their Dominican peso is going to increase, which makes their citizens poorer. That in effect causes a chain reaction, because now at the airport they have to charge you more for taxes to come to the island. Then you're going to have a decrease in tourists. So now you're going to have less taxes from your tourism industry. You're giving tax cuts to the developers so they don't have to pay import duties on billions of dollars worth of equipment coming to the island. You let that slide. All of this comes into, you're putting your island into an isolation situation where your citizens are going to have to pay, or your tourists are going to have to pay for what you're going to need to do. Otherwise, you got to borrow at 10, not 10, but 5 to 6% rates from Japan, from China, from the United States, from the IMF, from the European central banks. And you can't borrow $1 trillion at 5% when your GDP is peanuts. So now you're going to cause an effect. Now, if you have a situation where you have less travelers and tourism coming, which is 20% of your GDP, you have all of these apartments, condos, townhomes, villas on track to be built. And your buyers have dried up. Now what? You're going to have delays, and you're going to have half of projects being built, and you're going to have an opportunity to buy something. This is why today in our SSN Lifestyle group, we had Nadine send a message for Urbe Vista where somebody's backing out, and now they are willing, the developer's willing to sell for the original price from 2022. That's right. This right here is what I'm talking about. All these guys, all these developers that were saying we're 100% sold out. I told you guys there's always another chance. You can tell me you're 100% sold out, but what I can tell you is 100% of people won't be able to buy 3-4 years later because circumstances change. When a person says, hey, I'm going to deliver this in 2024, 2024 comes, and then the person's like, oh, well, I was going to rent it out. That's how I was going to make extra money. I have money right now. But now all of a sudden we got into a financial difficulty and my credit's messed up, and now I can't get a loan, and I don't have the $50,000, $60,000 to finish up buying this. I got to back out. Now all of a sudden you're going to have all these units on the market, no buyers. That's when you get to swoop in, ladies and gentlemen. It's going to happen. So just because you think you're not going to get 2020, 2022, 21 pricing, I think you will. So you're going to have another opportunity to buy at a lower price, or just like it was 2021, 2022 in a lot of places. So never fear that you missed out. But that's when you actually want to buy. You don't want to buy at this one bedrooms for 170 grand. Are you serious right now? There's people selling one bedrooms for 170 grand. You can't rent for 170 a night in a one bedroom condo. I don't know where you can do this. 2 bedrooms, possibly, but you're going to be in Cap Cana. You just can't. This is out of whack for rentals, which is what most people were trying to do. So this is where this is going. So either the prices have to come down, which they can't in the Dominican Republic and a lot of places. Inflation in that country is not coming down. Their USD to peso is going to rise. It's 62, 63. It's going to be 65 by the end of the year. I told you guys last year it was going to be 63 in 2025. It's going to be 65 probably by December or January of next year. 65 to 1. That's inflation, ladies and gentlemen. So when people say it's cheap no, it's not cheap anymore. you're still paying the inflationary rate, whether you transfer it to USD or you transfer it to DOP. It does not matter. So this is where this is all going. So you're going to have an opportunity once again in the Dominican Republic. If you don't like the prices right now, then just wait. Just wait. You're going to see people that bought property 3-4 years ago, got delivery, tried to rent, found out the rental rate wasn't no 70-80% for them. And they're going to say, well, I did only buy this for 99 grand. So I don't mind selling this for 120, 130 just to get my money back because I got to pay HOAs when it's vacant. That's what's going to happen. So you heard it here first, but that means another opportunity. So if you can have money coming in to pay for it, that's even better. All right, here we go. There we go. Thank you. We try to tell the young generation how to do it, and they look at us like we're crazy. The longer you wait, the less chances you have. That's it exactly, post-retirement travel. In fact, you want to know something I was reading the other day? I wish I had Wi-Fi. My Wi-Fi's out again, this Xfinity thing that I don't know what to do with. But anyhow, I saw something that said if you wait 10 years to invest, you lose $300,000. Being conservative. We're talking about just the Apples, the NVIDIAs, the Microsoft and all that, and like VOO and all these guys, right? They're saying 10-year wait in it starting your investment journey means you lost out on $300,000 in your portfolio. Is that crazy or what? So now you hear me on the other side. You have grandchildren, you have children. When they're born, imagine having their life insurance. Imagine having them money going into a child fund account, even if it's $100 a month. By the time they're 18, there's a nice little nest egg waiting for them, right? So just keep that in mind. And if you have a way to trigger, like right now, you're in perfect position where you actually can have dividend income coming in from major corporations at a high rate, and you can actually transfer half of that into paying for your offspring and your lineage down your line. All right, your family. Think about it, ladies and gentlemen. All right, facts. You snooze, you lose. That's how it works. We can only be the messenger. I've been here for 5+ years. Get me in the messenger. We take high risk, we take middle risk, we take low risk. It's the full gamut. So right now we're doing low risk with stocks. We're not just doing any willy-nilly stuff. We're not trying to do any crazy stuff with crypto. We're not who cares? This is long-term planning right now on the retirement front. That's what we're trying to do here. All right, I'm going to wrap it up, ladies and gentlemen. It's time for me to go. I'm going to get myself some of that nice California Cabernet from Gnarly. So let me go get some of that and get me some more food. Have a nice little hors d'oeuvres. And then we'll see what the markets bear tomorrow when we wake up. I have a feeling they're going to stay about level, and there's going to be some talk, and I think it's going to be a little, not 2%, but, a few percentage points higher overall on the stock indexes, but there's going to be movement in the stocks themselves. So we're going to see what happens. You can check history. You can check history, see what happened in 2008 when we had this big ass boom for one day. That's right, boss. Good night, fam. Thank you. EV Place, thank you. Once again, everybody, please like, subscribe, and click the bell below so you get the latest updates. And if you want to come join us, because I know it's hard out here for the SSN Lifestyle Punta Cana Investors Forum, go sign up now. It's May 13th, 14th, and 15th. Go find out what it's all about at ssnlifestyle.com or stopstrugglingnow.com. And with all that said, I love you guys very much. I appreciate your support. I appreciate your input to help other people. That's what we started this station for, what we started this podcast for, what I started this channel for, was so we can get a lot of people to help other people for that rising tide. And that rising tide just started in the last 10 days. It started. So just make sure you guys are there. All right. Now, let me see what this is. And also take some L's on the way. That's right. Like the dude that took our money to build a crypto store in Cyprus. Exactly. No crypto store, no nothing. Don't, yeah. Oh God, don't remind us, Victor. Exactly. Miracle Cash. Exactly. Still scamming people, still saying they changed the name, talking about they're going to do this, that, and the other. The same crap they've been promising for the last 3 years, 4 years. Reboxing it. Crazy stuff. Unreal. And a lot of other stuff that went haywire, mind you. Money lost, but thankfully, we can make it up in today's stock market years later. How beautiful is that? All right, ladies and gentlemen, just keep this in mind. No matter what happens out here, be safe. Don't let anybody put you into a box, put you in the corners, and always think there's always a way out no matter what you do. There's always a way out of any argumentative situations. Just make sure you diffuse it. A lot of people under stress and duress. Make sure you're not. And with all that said, keep your head up. Keep moving. And I'm out.